Good morning. It's Wednesday, June 4th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. I was reading an interesting article last night. It was on pawn shops and how they were recording record profits here from the spreads between buying and selling gold and silver from the public. So remember that futures markets, they do have the tightest bids and offers, the liquidity, and that's just food for thought. Also, you got about 23-hour access from Sunday night all the way till Friday. So looking at overnight here, President Trump called Xi Jinping very tough and extremely hard to make a deal with. That was in a late night social media post. There was little or no impact on the markets. Perhaps some of these markets are having some tariff fatigue, and that's beginning to pass here. But tensions between the two countries, they may be increasing as the U.S. recently barred shipping of critical jet engine parts to China and then seek to slash some fresh curbs on Huawei technologies, among other measures here. So the White House expects a leader-to-leader call between Trump and Xi Jinping happen later on in the week here, but China is yet to confirm those plans. So the two sides have very different understandings on what is agreed upon, especially on rare earths and other different commodities out there and different trade negotiation tactics and skills here. So we'll continue to monitor that, but we haven't seen much dialogue come out of President Trump. So we've had a lack of kind of volatility in the markets, but oftentimes when you get that lack of volatility, volatility comes out of nowhere and surges. Now, speaking of volatility here, looking at an overview of the general markets, the option markets, well, the option traders, they expect the S&P 500 to post its smallest swing in months following Friday's U.S. employment report. So you start to look at the implied volatility, things like that, the deltas on some of these options going out for the next few days, and are expecting just under about a 1% move in either direction here. So there's some complacency between this 5,900 and 6,000 mark. However, I'm going to continue to monitor that resistance, that overhead resistance there. Can we close and confirm above it? Will we start to march to all-time highs in other markets here? In other equity markets, because global equities, they are hitting an all-time high with European and Asian stocks both gaining. The dollar treasuries, they came off here just a little bit, but investors, they are going to continue to remain cautious with the trade war, the geopolitical tensions, despite this current optimism. So they're going to look at, we do have some services data coming out. We have ADP, and then we've got that employment situation report here at later on in the week. That's the non-farm payroll and the unemployment rate. So I think that traders might be having a little bit of fatigue here. So my personal bias here is I remain bullish on the futures, but with some protection. Why do I have protection? Well, why do you have car insurance? And you don't crash your car every single day, but you continue to pay that. So it just makes sense. So, I might look at the volatility index. Remember, they've got like mini and micro on the volatility index. Also on the micro contract on the S&P 500, they've got those September. They've also got those June options out there. And I think that they really do a great job here as far as the pricing structure, the size of that contract, and then looking, the amount of time out there for that personal protection. Excuse me. So looking at the technicals here, something I did update in the chart pack, if you get that, was the Russell 2000. So if you look at the Russell 2000, has this inverse head and shoulders pattern going on, and then also has a bull flag going on. If you look at the Russell 2000, it was one of the better performers on the indexes yesterday, really breaking out to the upside here. Not a confirmed breakout yet on there, but it was definitely quite a bit of buying here and quite a surge into that market, driving those prices higher. Now you look at the gold market here, down about $4, and they really just rug pulled it a few minutes ago. Same thing with that silver market. I mean, we're still seeing central banks, they're buying gold at a record pace, accumulating about 80 metric tons per month, which is about $8.5 million here. The scale is kind of unknown, but it's of course driven by the concerns of the US dollar and then also the geopolitical tensions here. So you got gold down about just under here $3, $33.74, but it got up to that $33.97. So we're going to want to continue to monitor that because of the fact that, okay, we do have that bullish flag pattern here. Market closed just a bit over there, but then the next day kind of settled below it. So you want to see that confirmed breakout. We just really have an unconfirmed breakout at the moment here. So what we'll do is we'll continue to monitor some key levels like 33.42 on the gold market, 33.08, 32.73 as possible areas of interest for positioning in the market. Not a recommendation to the public, just those levels that I. And if you get the metals edge, I put out all the tactical levels there on many of the different commodity markets here. And those are areas where we've seen some volatility adjusted spots where the market based upon previous volatility over the last few days. We'll weight it, and then we'll look and see what a measurable true range should be on the market here, and then we identify those, and oftentimes you'll see the market really either dance around those areas or they might just hit them and completely stop. So looking at the silver market, 34.23 and 33.79 are some critical levels of support as well. The resiliency in the copper market yesterday, that was kind of your tall tale sign that the silver market would come back, and it actually closed about unchanged, slightly higher on the day. So those are some things that I look at here as the gold market. I'll look at the copper market when I'm weighing in on the silver market, and then to get some clues on where the gold market's going to go, you'll look at treasury yields, you'll look at the dollar index, and then you'll get a broad sense of the market by looking at all the different indexes. So those are kind of some inside plays as far as how I'm monitoring it. Now, if you were sitting here next to me right now, you'd see that I have a screen here that has just news flow going through. I've got another screen with intraday charts going on full time. I've got another screen over here that has all the commodities with longer term with my notes that I put on the chart pack, but I have notes on almost all 27 different commodities. I give you guys a small slice of what I'm looking at here, but it's got key levels of support. It's got key levels of interest here as far as positioning in those markets, and leads as a roadmap here as where you should be looking at on those markets, at least what I believe are some of the twists and turns that we're seeing in the markets. Now, if you look at the exchange traded funds here, they added about 141,000 troy ounces of gold holdings in the previous session here. So we saw a little bit of a boost, and then the ETFs, they cut quite a bit of holdings on that silver market in the previous day. So that first half of the day where prices were really under pressure in the silver market, those were people just exiting. And what they saw was they saw this $1.80 rally in the silver market. You get this huge extension upwards, and then what do you want to see? Anytime you get a breakout, you have to see the next day. You really want to see that market open up, at least for the first hour, trade higher, and continue to go from there. Okay, that's your confirmed breakout. But most of the time here, what you'll see is you'll see position where if you don't get that follow through, you'll see them start to take some positions off. So they cut 1.42 million ounces of gold holdings from the previous trading session. So it's natural to see that year-to-date percentage dip here to 3.3%. That's the change in the ETF holdings on a silver market after such a big move. I can tell you from an inside standpoint, I deal with hundreds and hundreds of people on the futures and commodity markets. And when we get these big surges in these markets, when we get things near key levels, the investor sentiment changes, or at least their objectives change, and they start taking short positions in the market. So many of you attack the short sellers in the gold market, the silver market. Oh, they're so evil and everything else. Well, when you get to certain current levels here, people will come in and they'll short, just like naturally when the US equity markets hit some certain critical levels here. We're butting up against resistance. We haven't broken through the 6,000 mark. What do? They'll start to look at put options. They'll look at shorting futures and things like that. So it's just every person's going to have their own different objectives. If someone had several thousand ounces of silver and it gets to $35, $40, $50, and they don't want to offload it at the pawn shop, what they could do is they could short it and hedge it on the futures contracts here and lock in some of those price gains, wait for things to settle back down, and then unwind some of those hedges, just like a farmer does here on a year-to-year basis. So that's not a recommendation. It's just an outlay of some observations that I see in the markets and some things going on here. Just like I continue to monitor other outside markets, like what is the wheat futures doing? Well, Chinese wheat output may drop as much as 5% this year due to a drought in some key growing regions here, potentially reaching its lowest level since 2018. Another market that I'm looking at here is sugar, hitting a 4-year low. Traders are seeing some improving supply prospects here, and they may start to look at where the producers will come in or the end users start to support the market because of those prices hitting 4-year lows. So just some things to monitor here as well. We're also seeing Bitcoin futures after surging and kind of making that triple top on the market, pulling back a little bit back into that upwards channel here before lifting back up. So we're going to want to continue to monitor the 104,000 on Bitcoin on the downside, and then look at some things like that 108 110, things like that, back to the upside. So we're sitting here monitoring a lot of different markets here, but all the agricultural markets, they are up here today. Dollar index just slightly lower. Foreign currencies are really mixed here. You got 10-year treasury yields essentially flat. U.S. equity markets are taking a wait and see approach near some of these resistance points. Again, the Russell 2000 continuing to lead the charge back up here again. Fangs are slightly off here a bit. You've got copper futures pushing back up. That's one of your better performing metals here, as well as the platinum market. So platinum came down, tested support. There was a hit job piece on the platinum market yesterday, and prices were down a bit here, where they were saying it was a major end user and producer of the platinum market. And they were saying that some of the growth here, some of the demand in China was really stagnant, and they're starting to see some of the kind of saturation of that news story, where they said that people had shifted from going from gold over into the platinum market. So we saw platinum futures retest support and then push to the upside. We also saw palladium futures. They came back down, retested the wedge pattern before bouncing back up as well. So those are a lot of different things out there. Cattle futures closed down 4 out of the last 6 days. Yesterday, they were holding up all day long, and then finally they broke into the close. So that's another market we've been looking at. Soy meal futures pushing up here. The December contract up at 307. We'll continue to monitor that here, as it's one of the most heavily shorted markets. I told you one thing I do on the weekend is I look at the commitment of traders report. I get the one that has the extremes, so it says extreme, long, shorts, who's the extreme long, who's the extreme short, and a lot of times that'll give you some clues here, especially in low volatility environments. So a lot of people bought options with the high volatility that was going on recently. So when you get the VIX pushing up into what Hedgeye calls like the chop bucket, when you get to this like 24 to 30 range here, and markets are just so choppy, that's when people, where they're buying options, oftentimes are overpaying for it. And then when you get these periods where now you look at the VIX, on the VIX futures dropping below 20, sitting at 19. Equity futures are just all fine and dandy. The world is a rosy place here. Then you start to see those premiums come down. So if you bought options in the high volatility market, and then all of a sudden now we're in the low volatility market, well, you've really overpaid and you're bleeding out on those. Now what you want to look at is when you get to these low volatility environments here, this is when you start to look at options that go farther out, because they generally start to go on sale. So, you always want to buy your fire insurance when it's before the drought comes and things like that, because of the fact that the premiums are going to be a bit lower. You buy hurricane insurance when it's the middle of winter and there's no hurricanes present. So those are just some observations here. Going to be a busy day in the futures commodity markets. It's a slow period right at this moment here, besides that small rug pull on the metals markets, which started to push back up here. But we'll have ADP, we're going to have the services data here, and then the rest of the week we've got quite a bit of economic data that could give some clues as Fed direction. So you got any questions, shoot an email, info@bluelinefutures.com. Also, if you want to open up an account, you do that as well here. And then remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.